Ramesh Kannan from Kaynes is back with us. Ramesh, apologies for that, audio glitch. Just, get back to your thoughts because you were talking about how the quarter gone by has been.
For us, it has been a good last quarter. And our sector, last quarter has been always good. Added to this, India domestic requirement has increased. Exports, yes, I am seeing a bit slowdown, but expecting by end of 2025, it to go up. So last quarter has been a good quarter for as far as Kaynes Technologies is concerned.
All right, moving right on then, I wanted to also get in a sense from you as to what the outlook is in terms of the recent order inflow, the kind of client conversions, what have they been like? Have you signed any new major customers of late? Are there any big orders in the pipeline? Because the order book as on December stands at about 2,558 odd crores, if I'm not mistaken.
Our order inflow has been increasingly growing, and I'm seeing that we are getting orders from the second quarter onwards to fulfill at around 175 crores per month. If this being the situation, I feel the year should go very well. And then there are orders across different verticals. So even if one or two verticals go up, it is not going to fail as far as Kaynes Technology is concerned. We see in the railway sector, we see heavy growth in the connectivity, telecom, across all the industrial sectors, a high growth as far as Kaynes is concerned.
So for FY24, sir, what we should expect? I mean, analysts are penciling in a number between 130 to 150 crore. Are they realistic or are they optimistic?
FY24. It is very realistic because India domestic requirements are increasing, consumption is increasing, and government is putting on more focus onto the infrastructure. So our industrial PCBs are required for the capital items, and since these markets are growing, I find that there is a large increment. And I find the same trend going up to next year. By the time we are getting exports inquiries too. So I'm sure there will be a large growth this year as well as next year.
That's what I wanted to talk about because, as of now, around 20% of your revenue is coming in from exports. Help us understand where the mix, both between revenue coming in from domestic as well as exports businesses is likely to shape up going forward.
See, during this year, somewhere we will stand at 20 to 24%. That is this fiscal year of 23-24. But end of 24 onwards, I'm seeing exports going up because exports, there is no growth. This itself, we are able to withstand because of adding new customers to our base. If we had not done that, our exports would not have grown. So, whereas domestic businesses is where I am really seeing a good growth, and it is shown in all verticals of ours.
Historically, markets have not liked companies which are dependent on government. Your largest vertical is railways, which is dependent on government. Now you're sounding confident about your railways vertical, but isn't that a vertical which could be volatile depending on government policy making? Past experiences that when you're over-dependent on a government vertical, numbers could be volatile.
As far as we are concerned, though our largest vertical is railway, but today automobile is also equally strong, and we are a widespread company. We do for industrial, we do for everything. So our risk is managed between these verticals.
Who are your nearest competitors? Whom are you competing with when you are bidding for a railway contract or an automotive contract?
See, we are not directly dealing with the government or Indian Railways. Our contracts are with Hitachi. Our contracts are with Siemens. So we are a tier 2 company. So as far as we are concerned, we have orders confirmed for the next 24 months, which they in turn have got from Indian Railways.
Okay. Just to switch
Different
gears.
sectors, let me also answer one question of yours. In
Yeah.
different sectors, we have different competitors. As far as railways is concerned, we are 90% of Indian rail signaling boards are going from us. Onboard equipments, we are trying to get qualified. So I'll see that our company is playing a big role on onboard equipment too.
Okay. Uh, could you walk us through how exactly are your receivables in the private space and in the government space?
See, we don't have any government space at all. We are in the private space. But our type of business normally goes on a 90 days credit, sometimes even 60 days credit. So our receivable days are anything between 60 to 65 days. So this is where we are in. But going forward, as the company grows, we will see this also improving a lot because there are various other financial instruments available with these large players. Hello?
All right, Ramesh, really appreciate your time and thank you so very much for joining us.